Hello everyone, my name is Moji. You're watching a Bitcoin Bubble news channel. For the Fed, looking at inflation as the risk has become so important that it's almost dangerous that they haven't been looking in the right place. Austin Goolsbee, a vote member of the Fed, may have said this morning, "We're paying attention, we need to pay attention to real," which means the real Fed funds rate. And if you think that inflation is going to go down and drop below 3% or even to zero, you'll see a real Fed funds rate that will make them move. It's now clear that they're going to ease up. Also, it's clear that more and more people are paying attention to the falling prices, including crypto, and want to know what's going on. We talked about the future of current markets, the ongoing fight over inflation vs. deflation, and the changing relationship between the yen and the US dollar in a recent interview with Cathie on Air Invest. It's clear that we're about to go through a big change in the way the economy works as Cathie breaks down market trends, the yen's weakness against the dollar, and the world's move from inflation to deflation. Bitcoin was selling around $1.55,000 at the time of this conversation. It had dropped 2% in the last 24 hours and 16% in the last week, and there are now 19 million Bitcoins in circulation. This yen carry trade goes all the way back to 2011, if you look even further back. Since then, the yen has been cut in half. It did level off at one point, but if you were trading on the carry trade and it was just level off, that was fine. It just went against now. In a week, the yen dropped from 162 to 142. I know this looks wrong. That means the dollar is worth less than the yen now. The yen is now worth more. Some people bet that the value of the yen would stay the same or go down, and now those people are possibly getting hit by margin calls. We're trying to figure out who they are and where they are because this seems to be about a lot more than just crypto. Okay, it seems like a lot more than coin. Oh, one more thing about that. I already said that the theory is that the carry trade involves shorting yen or borrowing yen to buy government bonds. That doesn't seem to have happened, or if it has, we're seeing a flight to safety into bonds. They haven't been selling off, which is what you'd expect if they were on the other side of the carry trade, unless this flight to safety is making that less important. But it looks like this theory is true, and Nick, you were the one who brought it up. I know I said that this Mag 6 trade is very rare because only these 6 stocks are moving the market forward. Though it does make some sense in the light of this carry move. That's interesting. A day or two before the Fed made its decision, Bill Dudley, who used to be president of the New York Fed, said, "Okay, when the facts change, I change my mind, and I plan to change my mind." I think they should take it easy tomorrow or in the next move. I asked myself, wow, what does he see out there they didn't do it then? We also got 2 very bad reports, the Purchasing Managers Index and the job report. The job report was very bad if you look it over. I also think that the Fed will hold an emergency meeting before the September meeting if the markets don't calm down again. Professor Jeremy Siegel from Wharton, who is very well known, is calling for 75 to 100 basis points right away. This seems to be saying that more and more people are realizing that inflation is not the danger. Yes, it is decline. Prices are going down. Yes, so good deflation is linked to innovation, especially innovation made possible by technology. And that's why we've been studying learning curves from the start. We also try to keep track of how fast the prices of each technology are going down. Our world is used to low prices. We're ready for it. Most of the rest of the world, though, is not used to low prices. It's been a long time since they've seen it. Because of this, you have companies that have depended on raising prices to make money. They are no longer able to do that. That's why good decline is linked to technology. Deflation that is bad happens when businesses raise costs and customers don't buy anything. They have to cut prices even though their cost models don't allow it. Their cost levels are not going down. That's bad for those businesses. Deflation that is bad is also linked to having too much debt. It's when you owe too much money and have to sell for any price to pay it off. I also believe that is a bad decline. Deflation is bad. Another reason is that the Federal Reserve doesn't realize it's too tight and that this is causing prices to fall across the board. I think you'll hear a lot more about this. You haven't heard people talk about it or like this before. Wall of worry is a term used in the stock market. Yes, you do build a wall of worry, which is good for a bull market. You don't want everyone to think it's safe to go straight to the right. You want a lot of stress out there. I believe that the bull market has been bad for everyone because it has been so focused. We've been saying for a while that a really strong bull market would help a lot more stocks. And if we're right and interest rates do go down, we don't know what to do. Do you get what I mean? That this is just a carry trade that should go away and that as interest rates go down, other companies and stocks should do better. it's possible that that would be a great bull market. What would happen is that you would get the Mag 6. You might pass the time or even make money,